Wait, $32 billion dollars just disappeared? Are you serious?
Yeah, completely. That's the mind boggling story of FTX. It's a modern financial fable.
I thought FTX was supposed to be the safe one, the Goldman Sachs of crypto. Everyone trusted it.
It was meticulously crafted to look safe, right? Millions of users, blue chip investors lining up. It was everywhere, from Super Bowl ads to naming rights for an arena.
And then boom, it went from zero to a $32 billion dollars valuation in what, 3 years?
Exactly. But the cracks were there the whole time, buried in the code and the financials. People were just mesmerized by the growth and didn't see them.
So the core of it was this connection to Alameda Research. They were making insanely risky trades with customer money?
That's the heart of it. FTX, the exchange where you and I deposit our money, was essentially lending it to its sibling company Alameda, which was taking massive speculative bets. It was a catastrophic conflict of interest.
That's insane. So it wasn't just bad trades, it was a fundamental breach of trust. Where were the auditors, the boards?
A great question. The corporate governance was, to put it mildly, theatrical. There was no real oversight. The so-called risk engine on FTX was a sham. It allowed Alameda to take on virtually unlimited debt that no one else could.
So then the CoinDesk report drops, exposing Alameda's balance sheet. And that was the match that lit the fuse.
Precisely. It revealed that Alameda's assets were heavily concentrated in FTT, FTX's own token. It was a house of cards built on its own currency. Then Changpeng Zhao, the CEO of Binance, tweeted he was dumping his FTT holdings, and that's when the panic went nuclear.
A classic bank run in the digital age. So everyone started pulling their money out at once?
Yep, in just 72 hours, about $6 billion was withdrawn. The platform froze. They simply didn't have the liquid assets to cover it, the digital equivalent of a bank with no cash in the vault.
And by November 2022, FTX filed for bankruptcy. Billions lost. Chaos everywhere. What happened to Sam Bankman-Fried?
He was arrested in the Bahamas and extradited to the U.S. Facing a long list of charges: wire fraud, securities fraud, money laundering, conspiracy, the justice system moved surprisingly fast.
I still can't get my head around the scale. How did it even get that big so fast without anyone asking these basic questions?
Aggressive marketing, celebrity endorsements from Larry David and Tom Brady, they sold a narrative of responsible, effective altruism. SBF was this quirky genius who was going to give it all away. It was a powerful story that drowned out the skeptics.
They even had their own token, right? FTT, which basically acted as fake collateral.
Yep, FTT was at the core of the whole scheme. Investors and the platform itself treated it as a solid asset, but its value was artificially propped up. When Alameda needed a loan, they'd post FTT as collateral, creating money out of thin air.
So basically, people were trusting this token that was just self-issued monopoly money.
Exactly. It was high-stakes leverage dressed as stability, a circular economy where the value of the collateral was entirely dependent on the perceived health of the company issuing it.
Sounds like a ticking time bomb. It makes you wonder about the entire crypto ecosystem. Is this a one-off, or is the whole space built this way?
That's the billion-dollar question. FTX was the most extreme example, but it exposed a systemic lack of transparency and regulation across the industry. The not your keys, not your coins mantra exists for a reason.
Right? Because on a centralized exchange like FTX, you don't actually control your crypto. They do. What about the customers? Were they just wiped out completely?
Many lost everything they had on the platform. Some had their life savings trapped. There's a bankruptcy process trying to recover funds, but customers are last in line, behind lawyers and secured creditors. They might get pennies on the dollar years later.
This feels like Enron or the 2008 financial crisis all over again. Complex financial instruments nobody understood, trusted names, and then, poof.
The parallels are uncanny. Patterns repeat: blindingly fast growth, hidden risk, over-reliance on leverage, and a sudden collapse of confidence. Human nature and greed don't change, they just find new technology to exploit.
And the fallout? It's crazy how fast it all unraveled. It didn't just affect FTX, did it?
It sent shockwaves through the entire crypto market. Prices cratered. Other companies like BlockFi and Voyager, who had exposure to FTX, also went under. It was a massive contagion event, a Lehman Brothers moment for crypto.
Do you think people will actually learn the lessons, or is the allure of easy money just too strong?
Some will. The smart money is now looking for proof of reserves, transparent auditing, and clear segregation of funds. But there will always be a new generation lured by hype and the fear of missing out. The key is to learn from history, not just be entertained by it.
So, what's the key takeaway here for the average person beyond just don't trust crypto blindly?
It's about fundamental principles of investing, digital or not. Always check for liquidity and transparency. Understand where your money actually is. If something seems too complex to explain simply, that's a red flag. There are no shortcuts. Risk is real and must be managed.
Makes sense. Regulation matters too, huh? This seems like a massive failure of oversight.
Absolutely. Unregulated, opaque growth hides massive risks until it's too late. The FTX collapse has become the single biggest case study for regulators worldwide, pushing for clearer rules around exchanges, stablecoins, and consumer protection.
It's scary to think about the human cost. Millions of users affected, lives upended.
True, behind every dollar lost is a person, a dream, a plan for the future. That's the real tragedy. But studying these failures, understanding the mechanics of the collapse, is our best defense against it happening again.
I guess every financial bubble has a story like this. Tulip Mania, the South Sea Company, the dot-com bust.
You've got it. Enron, the 1929 crash, now FTX. The names and technologies change, but the underlying patterns of hubris, greed, and collective delusion remain eerily consistent across centuries.
It makes me wonder what the next big failure will be. AI? Some other nascent tech?
It's often the thing that's growing too fast, promising to change the world, and surrounded by a cult-like following. Hopefully, people learn the lessons of FTX, the importance of skepticism and solid fundamentals, before the next bubble pops.
32 billion gone. It's just an unbelievable number.
Yeah, a number that represents a colossal failure, but the lessons we can draw from it? For investors, for regulators, for anyone in tech or finance? Those are priceless.
So final word, due diligence, transparency, and never let hype override common sense.
Exactly. Trust, but verify. And always remember, if history has taught us one thing, it's that it will repeat itself if we choose to ignore its lessons.
It's a sobering story, but a necessary one to hear. Follow for more deep dives into finance history, everyone. These lessons are too big and too expensive to miss.